Now it'd be great if the slides would advance. That would, haha. So one of the things I think Spencer went over, like there were some spreadsheets last time that you all could have used from, but one of the first questions we get is, what records do you need to keep? The answer is almost everything. Record of your sales. We've had farmers keep that in like a flip binder with just like lines for how much they sold at the farmer's market each week, or from their house, or to a restaurant, wherever they're selling. If you had any deliveries, any bills you have, receipts, your bank statements that contain the account. The part that most beginning farmers are not the greatest at keeping, aside from all of the above, but the inventory, especially like when I look at people who are raising hogs or beef and they have frozen inventory at the beginning of the year, and you do need to take stock of that and give that to your accountant when they do your taxes, because that has value, and that means that you spent money but didn't get those sales back, and they're going to carry over into the next year. Timesheets, if you have employees, actually, honestly, keeping track of how much time you put in is not the worst thing. And we'll go into why here in a little bit. Any personnel records, if you hire somebody, legal loan documents. You don't know how many times I've been like, is there a mortgage on the farm? They're like, yeah. And it's like, well, how much is left to pay it off, and who's it with? And, what's the interest rate? Because I need that for the financials. And they're like, we don't know where that is. And so they call the bank. So keep that somewhere. Like in my house, literally have a top, because you would think I was super organized because of the job I do. I am about work, but that's the only thing. Like literally nothing else is findable in my house but work. So I have one drawer that is devoted to all the important papers I need. I've been stuffing all my tax documents in that drawer for a month now because I don't want to lose them. But have a drawer where you keep your important stuff. Your budget. This is something that people, and we'll go over a budget today and how to kind of create one. If you don't have one, this is when Mark and I first started talking about what to do in these workshops, working on a budget and how cash is going to work through that budget on not just a yearly, but a monthly basis was really big, because I've seen more than one small farm run up against like, well, the projections say I should have $4,000 by the end of the year, but right now it's April and I need to buy soil amendments, transplants, and packaging for the things I'm going to sell in May. And then they don't have any money, and they're calling me looking for grant funds, and I'm like, I don't got a grant for that, not in this turnaround time. Equipment manuals, those are big. It'd be great to keep all of those. And spray records. People who are doing any kind of spraying, keep a record of that because of liability issues, and you should know how much stuff you use, whether you're organic or not. There's actually a legal thing if you're using any pesticide or herbicide, you have to keep those records. So to some extent. So, and Mark, if you notice something interesting in the chat, let me know, because I'm going to be completely oblivious. So why should you keep better records this year? It's to help you make your future projections better, to understand where and how your cash flows through your business, and be better prepared to get a loan for that new tractor, or even a loan for that used tractor, as most of us do. A lot of times, like there's the Kentucky Highlands SOAR small scale farm loan. They need to know that you have sales in order to give you that loan, which is a great loan. It's $7,500, 1% interest. The first year you just pay the interest. It's better than inflation. So, but you're going to have some records for that. Things you're going to look for when you're keeping your records. And I found the stock photos on Google or on PowerPoint, if anybody's wondering, because I got tired of really boring presentations. Key performance measures, your number of customers. So if you can have an idea of how many transactions you do each week, how many people come to the farmer's market each week, how many people come to your house to buy eggs, or even each month, your sales, and the amount of sales per transaction. Those are actually not too terrible to keep if you know how much your sales were at the farmer's market on the weekend, and you had about 25 customers, you're going to know how much each customer spent. And then for your sales forecast, this is part of business planning, is 3 to 5 years, how much you expect to sell, broken down by product line. That sounds complicated, and actually it is kind of painful to get there, even for me from a business, because I have to ask you a ton of questions when we're going one-on-one in this. But you know, we'll go through a little bit on how to break that down. And then one of the ways I think about it is I want to sell at least $40 of tomatoes, which means this many pounds of tomatoes for at least 12 weeks out of the year. And some of those weeks, it's not going to just be 40. I want to do 80 because it's a peak tomato season. And so that's how you start like thinking about that forecast of sales. Like, all right, so carrots come in season now. I think I can sell $15. And I realize these are low numbers and I'm keeping them low so I don't scare anybody off. But I also have people, I have a farmer that Mark actually has worked with as well, that we went from $400 in sales the first year and we're at about 20 grand right now. And that first year we were literally looking at like, we sold $15 of tomatoes. But we worked with them and we made forecasts and they came true. We don't have a crystal ball, but really hard work for the farmer and made best guesses. But it took us 3 years to make a business plan because we wanted to wait till we had good records. And that he was comfortable enough making a good guess because I think to him, if we got done, we had carved it in stone that he would make those sales. He didn't want to disappoint us. You can't, like, the only way you're going to disappoint me is if you disappear or if you just don't try. I had a friend, there'll actually be a keynote at a farmer conference this weekend. And I said, she's like, thank you for never giving up on this. Is like, I don't give up on people who are trying and doing the recommended things to get their business there. That's not what I do. I will tell you hard truths though. So organizational system, before I get all sappy, a dedicated place for the records. That dedicated place should not be your glove box. It should also, my husband runs a small business. It should also not be the desk drawer in my office where you just stuff receipts. Not that that happens in my house with my husband's business, but at least all the receipts, actually, honestly, at least all the receipts go in the drawer. You don't know how many times I've been like, what are your expenses? And if I do encourage people to report this income on their taxes because it can help you later if you want to get a loan. And usually the income is not substantial enough to knock you out of anything. If you receive SNAP or Medicare or anything like that, it is, you know, it's not substantial enough to knock you out of anything. So once it is substantial, maybe you don't need as many things. That would be my hope, that we're making tens of thousands of dollars. But wherever it is, it has to be a system that makes sense for your business. If you are not good at keeping paper records and don't like writing things down, but you like using this thing right here, which, you know, is a phone. They call it a phone now, but it's a tiny computer with a camera that makes calls. Do the one that works for you. Create a system that makes sense for your business. Do something that creates efficiencies for your management if you have management. Files, folders, boxes, binders, whatever works. Sort them by year, the type of record, the vendor, if you're buying something from somebody, the buyer, if somebody's buying something from you, and keep your personnel records separate. We've actually do walk people one-on-one through setting up QuickBooks, and I've walked people through how to use a ledger book, and I have made custom Google spreadsheets for people to use, which now I just kind of replicate for everyone. But, you know, the reason we'll go into Google Sheets in a minute, but we do those because they're free. So systems, you have your manual ledger. I'm not an accountant. I'm not a trained accountant. So my theory on a ledger is have something that you put information in a system you understand. Just do it the same way every time. If you want to list things, a manual ledger, it can be a notebook, a paper notebook, and just make sure you write everything down and write what's sales and what's an expense, and categorize them properly and put the date, like, you know, the date you did it, how much it was, what it was for, who it was to or from. Those 4 basic things: date, how much it was, what it was for, and who it was to or from. So that catches sales, that catches purchases, that catches all of that. And your accountant can work with that when you're filing your stuff, and I can work with that. You could use a spreadsheet like Microsoft Excel or Google Docs. You could use a software like QuickBooks. And then a lot of people, especially for sales, don't realize that Square will do cash sales for free. We've actually seen entire studies now where they got a whole farmers market to use Square just to log all their sales, even the ones who weren't doing credit cards, because that was the easiest way to get all the data to see how people's sales went. It was up in New York and they were doing a study. So, but it's free. You can log your sales in Square. The only thing that's not free is they charge you 2.75% if they use a credit card. Pen and paper ledger. It's low cost. It's easy to use as long as you aren't making like 15 entries a day. You're going to have to manually tally them up. If you keep a nice ledger, I will help you do that every once in a while. I won't do it all the time. Well, okay. We have more people who work for K-Card now, and I'll probably have one of them do it because I just take way too long. So like I said, brief description, date incurred, amount, and to whom it was paid, profit entries, the income, the date, the amount, and who. So that's just a little revisit of what I already said. So I don't know if you know, but in marketing, like it's dozens of times that you say things before people remember. There's 4 things you need to keep in your records: the date, the amount, to who or from, and what it was for. So we're on time number 4 that we've described this now. Google Sheets. I actually stumbled across some Google Sheets that were already set up, and then I began modifying them for our purposes for farms for free. And you can store it all there. I stumbled across this for my husband's business because I didn't want to buy QuickBooks and stumbled across it for work. But I have since done it for work, and it will show you like your profit and loss, like how it's going throughout the year if you put everything in every month. And you can also just make a new clean sheet the next year. So it's a really easy tool to use. It can also be put on your phone. And I have in the past taught people to connect it with their camera and just take pictures of their receipts so that they can give the whole file to their accountant. So thank you for putting the store loan program in there, Mark. It took me a little while to notice that something happened in the chat. So that's just to let you all know. Microsoft Excel, that's what we use because that's what we're most familiar with, and it's kind of what most people who work with financials generally use if you're going to be manipulating them. It is your go-to spreadsheet. And this actually shows, now I can't remember what Spencer told me, so we did discuss this. Did you guys go through an Excel spreadsheet last time? You did. Okay, cool. So this is a blank version of that sheet. I thought so because he sent it to me and said I went through this, but my memory's not so great. I have twin 3.5-year-olds, and I'm just old and scatterbrained. So, it's better analysis tools. Spencer and I use pivot tables in it quite a bit and what if analyses for some more advanced things. And actually, I have people, if you give me information with the 4 things I just told you and they're entered well into a spreadsheet, I can take that and make that into a nice income statement or cash flow pretty easily at this point if the information is good. QuickBooks by Intuit, online and desktop versions. It will track income, expenses, make invoices, sales tax. It can be integrated with your bank account. It integrates with everything. It does not a perfect system. You should be ready. Like, actually, we tell farmers that if you're going to use QuickBooks, please let us know, because the chart of accounts is not set up for a farm business. And by chart of accounts, it's how things are allocated, like the options you get to choose when you put things in there and how those things are related. Again, I'm not an accountant, but we do have people on staff who are very good at setting those up. Other record keeping apps. I don't know why there's a cute plant there. I was just getting bored. So T-Sheets, if you have employees, it does track hours and connect with QuickBooks. Ag Squared is an all-in-one farm management app, but it's quite expensive for my taste. Tend, which is organic farm management. Mark, you all have played with Tend a little. Was it Tend? Somebody was playing with Tend over there for a little bit.
Yeah, we use Tend for doing some production planning for farms. It's really valuable for organic producers because they can track a lot of activities. But again, it's also pricey. It's not crazy, but it's another, I think, $40 a month, somewhere around there. But it's nice. It tracks field activities on live maps. There's a lot of functionality. There's some store components. But again, it's not perfect for everybody.
I was trying to mute myself while I took a drink. Can I advance slides? So Veggie Compass is totally free. Go ahead.
Oh, sorry. I was just going to ask, do these things also, are these kind of like an entire system that helps you track all of the financial stuff, but then also like the social media promotional stuff too? Are these connected in any way?
They're not connected to social media. As a matter of fact, most of these are very specific tools, to be honest. And that's the reason once you get to a certain size, having QuickBooks makes a lot of sense, or something similar. As far as social media promotion, I'm really old, so I thought of Hootsuite, but there's better tools out there now. And I haven't gone too much into marketing. Are you all okay with me? You probably didn't get my random marketing spiel that Spencer probably doesn't give they didn't get my random. Here's the 4 social medias and which one you should use last time, did they, Mark? Okay, so I'm going to disclaim this, but I am not a professional marketer. I just spend a lot of times telling people how to do it. So, people, first off, I want to say that social media should not be all of your marketing. I really encourage people to collect email addresses and phone numbers and use SM text messages on a weekly or bi-weekly or monthly basis, and then collect email addresses. But Facebook, people get on Facebook to see friends and family and then to share bad political memes. Okay, that's why people get on Facebook. I don't know if it's really to share bad political memes, but sometimes it seems like that. So Facebook is about connecting to other people and being part of the things you're interested in. Instagram, it has the lowest turnover, like I've just forgotten the word for it. When somebody clicks on your website and then they buy it, that's the lowest rate. That's no, conversion. That's what I'm looking for, the conversion rate, converting interest into a purchase. So Facebook has the lowest. Up next is Instagram. Farming is visual, food is visual. So it does pretty well on Instagram. It has a slightly higher conversion rate because people are getting on there to look at things they like, and it's less of connecting, or at least in my perspective, who doesn't even have it installed on my phone, it's less, and what the studies say, it's less about kind of the social interaction and more about seeing things you like. So the conversion rate on Instagram is a little higher and the algorithms are a little different. So very visual businesses are favored in it. The third and most underutilized social media in any of this is Pinterest. I'm going to tell you a little story. So I told you I have twins. When they were little, one of them's named Fox. So when they were little, I was like, man, I really wish that my mother-in-law, who crochets, would crochet him a little like crocheted hat that looks like a fox. Like that would just be so cool. And she knows how to use Pinterest. So I got on Pinterest and I searched for crochet fox hat free pattern because I'm cheap. 30% approximately of the things that came up were offers to sell me a crocheted hat, baby fox crocheted hat. They just want to sell me the hat. And I was like, well, this is silly. I'm not going to buy this hat. But a month and a half later, when my mother-in-law still hadn't crocheted that hat, I might have seriously considered, I did not, because I'm cheap and I'm married to a potter. But so here's the thing. Some of us will get on Pinterest and do the things that we search. Most of the world gets on Pinterest and buy the things that they would like to make but don't have time. I once told someone who makes goat's milk soap, I was like, post recipes and videos on Pinterest on how to do it. They're like, oh, they'll just all make their own soap instead of buying it. I'm like, no, they won't. No, they really won't. And as with any social media, I have the rule of 3. You have 3 types of posts: one that tells your story, one that is educational for your audience, and one that sells something. That's how you divide your post up. Too much selling, they tune out. But Pinterest is good for all of those. So, but Pinterest has a pretty high conversion rate, and a lot of your prime demographic for most direct consumer purchasing farm stuff uses Pinterest a lot, which would be women between the ages of like 25 and 65, in my experience, who want to own something that is handmade, whether they make it themselves or not, or grow it themselves. So just my little plug for why farms should have Pinterest pages. Share recipe for zucchinis, share pictures of your zucchinis and how you grow your zucchinis, and sell your zucchinis instead of hanging them in a not garbage bag, in a Kroger bag on your neighbor's door. Because I have come home to bags of zucchinis multiple, and I've given out bags of zucchinis. So beat clock. That's actually a really good way to track your labor and equipment hours. If you're putting a lot of hours on equipment, you need to track it. My father-in-law, who kept no records, had a lawn mowing business for years, and he tracked how many hours he put on his lawnmower to know when it needed certain maintenance. And whether it's a walk behind or a tractor or whatever you're doing, you need to have an idea of when it's going to need maintenance. Know your past to predict your future, and you've noticed your future is a beautiful field of sunflowers. So if you have 3 years of records, that's great. I realize that that's not where most people in a beginning farmers class are. So, if we're going to do sales, cost, overhead, and we'll talk about what goes into overhead, and then your farm production, like your yields and your prices. Like, it doesn't have to be yields per acre. Maybe it's yields per 50-foot row. Just know that you had 50 feet of tomatoes spaced this far apart, and this was the type, and that was the yield. Like, it doesn't, not everybody, most of us in the region do not operate on the acres. Okay. And then records of your market channels, like how much did I sell at the farmer's market? How much was I able to sell to that Mexican restaurant? How much was I able to sell to the local like school? Whatever. Know how much you sold and know what you sold them, so you can grow more of it and sell them more of it. Why work on your financials? You need to understand how much you're going to spend, when you're going to expect to have income in the form of sales, and planning your financial year is an excellent risk management tool. Like, none of us can control flooding and other things, but we can have an idea of when we're going to need to have some extra cash generally in the year. And you can identify areas that can pose a risk, like being too dependent on one market or crop. A lot of times we don't think about it. So I'm not going to throw any, I'm going to use my husband's pottery as an example because I don't want to throw people's farms under the bus, but we are very aware of how dependent we are on Etsy and a certain gallery in Florida. And 2 years ago, we became very aware of how dependent we are of in-person festivals. And when they all got canceled, we had to pivot pretty quickly. But we also already had identified other markets. And actually, that was one of our best sales years, ironically, because we had spent time at least preparing these other market channels. So there's 4 things that people will look at for a small farm. You might not do all 4. The one that I want to make sure you look at is your budget. So what you will earn and spend, and what you plan and what you actually, like the plan and the actual. An income statement, which covers a very specific period of time, usually a year. You could have an accrual method, which most of you will not be doing, which is where you run it based on how much people owe you and you owe them, and just cash. And then key items, you're going to have your sales, your COGS, which does not mean gears, it means cost of goods sold, your expenses, and then your net income. The balance sheet is the most confounding financial sheet that anyone has ever decided that you all need. So what it is, it's one point in time, it's what you owe and what you own. It shows how you have equity in the business. And it shows all the different assets you have, anything you owe on those assets. It's going to have your inventory. It's going to include the depreciation on the tractor, the useful life of the barn. These are all going to be somehow reflected in that balance sheet. And that's why it's really, really hard. But here's the beautiful reason it's called a balance sheet. It has to balance. What you own and what you owe will balance. by golly, we'll make sure it does, because it has to. It's in the name, balance sheet. Cash flow, this is actually probably the most useful part for you all right now. And that's because it's every cash transaction. The income statement, okay, so rules of accounting, income statement, your loans don't get okay. The principal part of the payment of your loan do not get represented on the income statement, but the whole loan payment, which includes principal and interest, is represented on the cash flow. These are rules of accounting. I didn't make them up. I'm a lowly anthropologist. I have learned to live by them. So in your income statement, only the interest from your loan will be represented, whereas the cash flow will have everything. The cash flow is a real what comes into the business, what flows out of the business, where it comes from. I like calling it sources and uses of funds rather than cash flow, because here's where it comes from and there's where it goes. So for a budget, enterprise one, maybe that's the farmer's market, maybe it's tomatoes, maybe it's kale, maybe it's pigs. I don't know. We think that we're going to sell this amount. Here's what actually happened. Here's the difference. And here's notes on why it was different. This little sheet can save you a lot of, if you can keep up with this sheet, this can save you a lot of angst at the end of the year of wondering where we went wrong and why we didn't go where we wanted to go, or figuring out what went better than expected. Because a lot of times people get to the end, they're like, man, I thought I was only going to clear like 10 grand this year and I cleared 12. And they just happy-go-lucky into the next year. You need to know where that extra 2 grand came from so you can expand on that and make sure you're prepared to bring that money back home next year. And for a long time, just to let you all know, K-Card's motto for a long time, anytime we gave a talk, was to bring more of the food dollar back home. That was the thing. We want to put more of the food dollar back into our farm businesses in Kentucky. That's why we do very boring things with numbers. So your expense items, anybody who was looking for seeds a year ago, man, a lot of this has really gone up. From if you needed to build a shack, like that's at least 25 to 30% more expensive on lumber at this point, or at least it was 6 months ago. So you can have notes like cost of lumber soared, fuel prices really went up, natural gas prices did this, propane prices did that. So when you're making your budget for each year, you can look at what happened, but you also want to look at the current trends. And then if something crazy or weird happens that year, maybe you didn't need as much in seed as in plants because you had some left over from last year, or somebody was like, hey, I have a ton of them, take some. These things happen. You didn't have to advertise as much as you thought you would. So, and it was a relatively mild year, so your utilities were lower, or it rained just the perfect amount, so you had to use less water if you're hooked up to water. So understanding an income statement, sales minus the cost of goods sold, so how much it takes to make the things that you sell, is your gross profit, minus your expenses, or I call it your overhead. That's your net income. So basically, you have your sales. So I'm going to stick with tomatoes. Everybody okay with tomatoes? Okay. So, and tell me if I'm breaking it down too simple. Just tell me to move on. But, so you have your sales from your tomatoes. That's great. Maybe you're selling tomato plants and tomatoes. You have 2 different types of sales. So minus the cost of goods sold. The cost of goods sold is going to be everything that went directly into making those tomato sales. So when I say that, like, if you had to buy seeds, if you had to buy potting mix, if you had to spend money for water to irrigate the tomatoes, if you had to put a soil amendment on those tomatoes, if you had to do something else to the tomatoes to take care of, usually get flea beetles on tomatoes, but we'll go with flea beetles. Whatever happened, like all the expenses that went directly, the packages, the little packages, if you put the tomato in packages at the farmer's market, the little baskets, then all those things, cartons, clamshells, whatever, those are directly related to sales. The expenses, or what I call overhead, that's, you couldn't sell tomatoes. You probably sold things other than tomatoes at the farmer's market, but you couldn't sell anything unless you paid a farmer's market fee. Maybe you had to pay an accountant to do your farm taxes. You had to pay for advertising for your farm. All the things that you had to pay mileage to get to the farmer's market. You can't attribute that to any certain crop, but it's part of your farm business. You pay taxes on your land. You had to pay part of the mortgage on the farm. all of those things. A teeny bit of that to the tomatoes gets to take a bite from the other things, but it's part of the overhead and it cannot be directly attributed to the tomatoes. And we're actually going to get even more in the weeds on this later when we work on break even.
We did
time
run
is it?
through some crop enterprise budgets a little bit last
Awesome.
week or 2 weeks ago. So just a reference for you.
I don't have to do as much of that then. Sweet. Spencer, so just for Spencer is an engineer by training. He's an agricultural engineer. I am an anthropologist. There's a vast difference in how we think about explaining things to people, which is why I wanted to get to see both of you. Both of us actually work really well together because our brains kind of fill in for the other's gaps. I say that kind of jokingly. I have more math than anyone else at K-Card except for Spencer, because I was an engineer to start with. But so estimating a monthly cash flow. A lot of people get super tore up over this. Like, how could I ever estimate a monthly cash flow if I've never put a crop in the ground before? It is hard to think about, but it's not rocket science. Don't stop working. Don't get what I call perfection paralysis. No. At the same time, you want to do the best guess you can because garbage in, garbage out. So somewhere in the middle, like, oh, I think that $40 a week in tomato sales is reasonable. How many weeks can I do $40? So, well, there'll be 2 weeks with $80. And I've had people literally sit down and go through a month by month thing, buy the different crops and say, okay, well, the farmer's market's open from May to October. Probably not going to have as many sales in May as you'll have in July. Let's think about like what you hope to get each week and assume that each month has 4 weeks and do a monthly budget like that across a whole year, rather than trying to just say like, all right, $5,000 of tomatoes. Just think about it from a monthly or weekly perspective. And a crop, it could be a crop. It could be, if you're selling at the farmer's market, into a restaurant and a school, like how much you expect to have of sales at different ones. If you're selling maple syrup, you're going to have a whole bunch of sales probably in February, March, probably March. So you can have an idea of when those are coming in and think like, all right, if I sell this many bottles a week and they're $5, well, no, they're not, don't sell for $5. If they're $10 a piece, then, we're going to have, I just need to sell 10 bottles for $10 a piece, and that's $100 of maple income a week for the month of March. So that's $400. Making tiny little assumptions. And if it comes out like way off, you can always back it down a little. I always tend to err a little bit on the low side with sales and a little bit of high side on the expenses so that you aren't left like, well, that didn't work out. I'd rather you have a little more money in the bank than you expected than not have enough. So before you start, if you're going to do a cash flow, you need to know your balances of January 1st, 2022. I know not everyone will have a separate bank account. Most of us probably don't for our businesses. But if you and I've made this advice, once you start writing this out, you may say, rather than the balance, like, here's the amount of money I am willing and able to commit to this business as of January 1st. That in my head, I can say like, yeah, that $500 goes to this business. Write that amount down if you don't have a separate bank account. Anything that people owe you or you owe them, go ahead and stick that on there. And if there's any monthly payment that you have, throw that on there. Like if you've gotten the small scale farm loan, then your payment is about $154 a month after the first year. Go ahead and stick that on there. And then think about anything you've already incurred that will be due this year. So here's your goal. You want to, for your cash flow, understand your sources of money that comes in and how you're going to use it. This is a big one for me. Identify any lean points in the year. Think about ways to help mitigate that, like I feel like I'm restructuring a creek here, to help make it not so lean. Anything you can do to help offset that, and then help you prepare for unexpected circumstances. even if you weren't going to do that small scale farm loan, or you weren't planning on taking an FSA micro loan, going ahead and talking to those lenders and letting them know you have a sustainable business and you're looking for loan options and may need an operating loan. I will tell you that one of the interesting things, and I don't think I realized this until I started working with KCAR, because I'm used to Eastern Kentucky agriculture, is that the big grain farmers in the rest of the state have an annual operating loan. They don't just cash flow that puppy every year. They take out loans a lot of springs and then they pay it back over the summer. Who knew? I thought we just had to sell our tobacco in January and hope for the best till the next January, but that's not the case. So having a relationship with a lender in case you do need a line of credit. And just so you know, people in Eastern Kentucky are obviously aware of this because the Farm Service Agency Small Scale Loan Program has one of the highest per capita lending rates in Morgan County, Kentucky. My aunt works in that office and that's what she tells me, but her boss also told me that. So I think it's true. And these loans are, like 2% interest up to like $50,000, and they'll make them on the cattle you're getting on your farm. It doesn't have to be a lien against your farm. So, but having a relationship and knowing where to go if you need that emergency is a good idea. So, I think that in what we sent you, yes, there was like a worksheet that had also with it a spreadsheet on the very end that was like a cash flow for the year. You guys got that, right? Everybody completely filled that puppy out between last time and this time, right? I see a yes, but some like nervous no's. I can't see all of you. So this is an example of kind of the end of that. Can you all hear excited? You can, can't you? Okay, just checking. Yeah, those are happy squeals, so we're still good. I have another hour. Let's hope it stays that way. So anyway, if you look at this person, they assumed that they were going to start with around $10,000 at the beginning of the year, which I realize is a luxury most of us don't have. But they were selling, I think in the example I've made up years ago, like they were selling a little bit of kale through the winter to a restaurant or something. So they're having a little bit of income, and then you can see it really step up. But then they have a whole big bunch. I had $12,000 of expenses in May. I don't know how to write on this thing without advancing the slides. So my sincere apologies. You know what? We're just going to try it right now. All right. So not working out for me. So in May, they had a whole big bunch of expenses to get ready for farmers market season and do packaging and some transplants, soil amendments, all kinds of things. And they knew that. And go ahead.
You'll say you might can use the annotate up.
I tried that. It did not.
Oh.
It just kept advancing the slide. I don't know what weird setting I have, but the annotate toolbar is up and it don't like me.
No good. Okay. Sorry.
It's okay. I tried. Hold on. Let's try the other. Nope. Still not gonna let me do it. That's not a happy noise. So, they had more expenses. That's the point in the year for this farm that they were going to get down to their lowest point in the bank account. And then after that, sales pick up in June, July, August. And so they're carrying over more money into the new year. But looking at this, I've actually looked at farms that look like this. And that's when I'm like, in all honesty, do you want to sell some CSA shares? 5 to 10 CSA shares you're willing to go for? It can help. Is there a market you can access a little bit earlier? Are there expenses you can put off? Like, don't buy all of your containers all at once unless it gives you a big thing. What I don't want to see, and what I've seen too often, is farmers go into credit card debt. And that's the most second most expensive way to go into debt. And I've seen it almost bankrupt farms. I have actually seen it bankrupt a farm. And it started by buying a few packages when they weren't expecting on the credit card and they just didn't have enough to pay it back. So I would really, getting an operating loan or a micro loan, it's called, through FSA would be a much preferable but it's going to take about a month to get one of those or more. So you'd want to know ahead of time. And just because you're approved for a line of credit doesn't mean you have to take it, but it does mean it's there when you need it. And it's way cheaper than a 20% interest rate credit card. So, and if you tell me in February that you're going to have a lean time right here and you call KCAR and like, hey, do you guys know of any funding or any tools we can use? We can look at that. I mean, Mark knows pretty much every funding trick that I have. We can help work through. You don't know them all. You know quite a few. So you know where our farmers need to go. So if you have a predicted lean time, are there expenses that can wait? Are there loans of line of credit? I have a picture of a credit card there. I need to put a giant X through that. No, do not use your credit card. And is owner investment an option, which is a polite way of saying, can you loan the business out of your personal account $1,000 for a month? I would only encourage this if in September you can take $1,000 back out. I say that saying, like, I know many businesses are not going to be profitable in the first 3 years, and this comes to where I really get to be not just the skunk at the picnic, but kind of the wicked witch of the West. I have been for some farm businesses, because we had a business, we've had more than one now, but in a specific one, they wanted to apply for a fairly large grant. And so we started running their numbers. They'd been in business about 5 years, and we're like, guys, we're looking at this, and looks like you're losing $20,000 to $50,000 a year. And once we start scaling this thing up, since you said your costs don't go down, the hole just gets bigger. So we don't think you should apply for the grant. They're like, oh, the grant will make the business solvent. And I was like, for 3 years. And by the time you're finished scaling the business up, your hole is now $75,000 a year. So we actually did, and what we do in those situations, because we don't want to just say we're done with you, is we give you a list of recommendations that we see that can help improve your business and to implement those strategies. And once you've started working on those, we'll resume looking at. We have this a lot because we do a lot of helping farmers with grant funding. Not a lot. We have it a couple of times a year that we do kind of like a business intervention of like, we really want to help you, but first we want to make sure we're not helping you make things worse. So we don't want to see the reason I'm talking about this, we don't want to see owner investment where the owner never pulls money back out. That's not the point. And nor am I like, you should become a millionaire farming. I think there are lots of great reasons to provide people food. And some of the farms that I've worked with the longest, they have a lot of food access things in them, and they want to make sure they're feeding their community and getting people healthy food. But at the end of the day, we need to make sure they're there for tomorrow to keep doing that good work. So, I don't think we all need to be millionaires. But I do want you to see, if it's a hobby, that's one thing. But if you want this to be a business, you can't just keep throwing money at it. And I don't think $75,000 a year is a hobby for anybody on this call. That's more than I make in a year. So that's very bad. I think my kids are the most expensive hobby I have by far. That was a bad choice of hobbies if I was going for cheap. Examine your assumption. Like in the example scenario, this actually really is, this is a scenario based on a real farm, and they actually implemented a CSA to help with that cash flow issue. And it worked. Their biggest cash crunch now is coming up in about, what is that, next week is CSA sign up week when most CSAs in the United States are signed up for? Yeah, that's a really good thing in March for farmers. Are there markets you rely on heavily? Look at your assumptions. What if one of them falls through? What if there aren't enough CSA orders? We have some scuttle that some of our larger CSAs might see a fall off this year because they've seen a huge rise through the pandemic, and we may start seeing that fall off. I don't think the Eastern Kentucky CSA market's necessarily going to see that, but around some urban centers, I think we're starting to see some the pandemic fatigue, and people are getting rid of things they started in the pandemic. Probably lots of sourdough starters going in the trash. So I just killed all mine or ate them. Unplanned expenses happen. For those of us who are in Eastern Kentucky, we're just real familiar with getting flooded all the time now. and the expenses associated and loss associated with being flooded. So looking at ways to mitigate that. If anybody's interested, once you hit about $30,000 to $50,000 in sales, I would highly recommend looking at something called Whole Farm Revenue Protection, which is a crop insurance designed for diversified farms that's available to every county for it could include maple syrup, hay, and pumpkins. Okay. And the government will subsidize up to 80% of your premium. So I've done some scenarios where a $50,000 farm could get insurance, 80% insure up to $40,000 of that their revenue for about $300 a year. And at $40,000, that's a significant part of a household income in Kentucky. So I think that that's a way to look at it. Before you have to have 3 years of expenses or 3 years of records to do that. So NAP is a like save me so I can replant next year option. NAP you can get also from your Farm Service Agency office, and that stands for Non-Insurable Crop Assistance Disaster Assistance Program. They left a lot of letters out when they made that acronym, so we just call it NAP. It doesn't have the highest payout rate, but for a beginning farmer, it can save you to be able to replant next year. Understanding your crop cost. I know you guys went through a little bit of this, and I just switched gears really fast. So I'm going to stop where we were. Do you all have questions over what we've done so far thinking about budgeting? Look at you, like in there with the links, Mark. Thank you. It's been a lot of me talking. I'm getting tired of it. So go ahead.
Let me look back. So there was just a question about, that was the whole farm revenue protection. Is that correct?
Mm-hmm.
Just confirming. Okay. Let's see what else.
And for better or worse, I'm KCARD's resident expert on that. Because Kentucky doesn't sell enough of those. We sold fewer than 10 policies in this. We don't sell policies, but somebody called the Approved Insurance Provider, AIP, sold only about 10 policies last year in the whole state. And for something that can cover, NAP covers like what FSA says the values of your pumpkins are. Whole Farm covers your historic revenue. Doesn't care how much it thinks pumpkins are worth. It knows how much pumpkins are worth to you. It's really good for direct to consumer farms. And once you've hit that $30,000 to $50,000 mark, I mean, the fact that you can put value added products with hay and honey is miraculous. You can just lump it all together. You have to take out, if you have a farm stand where you sell water, you have to take out your water sales. And the other thing I would say is most insurance agents in Kentucky are actually not super familiar with that. So if you want to reach out, I can tell you some people that are always at conferences interested to tell people about the program. And they're there because, they're interested. They're paid to do that. That's how they make their money. So, but at the same time, it can insure nursery crops with, it's just super underutilized.
I don't think we have any questions in the chat box, Marissa. Somebody that did ask, what is the NAP, N-A-P?
Non-Insurable Crop Disaster Assistance Program. And so that's actually sold through your local FSA office. And when I say sold, I mean that loosely. If you are a historically underserved farmer or socially disadvantaged as defined by the Farm Service Agency, one thing you're going to learn as a farmer is that NRCS has a different definition for that than USDA Rural Development, and the definition is different for FSA. So you just have a lot of fun. But for NAP, women and people of certain racial and ethnic backgrounds are eligible to have a zero copay to insure a crop at a 50, at the 50% level, which means that if you just basically have a total loss, they're going to give you like the bare minimal. They'll give you a little bit of it to be able to replant. I have some tables on that, don't have them handy, but if you're interested, you might, what I would say is that Dakota Moore is really much better at explaining NAP than I am. He's my partner in crime at farm insurance in the state. And if you go to the Kentucky Horticulture Council's Facebook page, there's recordings there of Dakota explaining NAP. So, and he has some tables of like, here's how much it would cost to get this, and here's the return you could expect if you have a failure if you buy up at this rate. Because you could actually get up to 85% coverage with NAP, and they can give you a premium based on organic. So it starts costing more, but just you can almost get free coverage on NAP for being, if the farm is in a woman's name. I know farmers who put it in their wife's name. Who are farmers too, but they always list it in their wife's name because
Yeah,
she's going to get it free.
and I think you mentioned it earlier, but yeah, NRCS is one of the agencies that doesn't recognize women as a historically underserved group.
That's yes. NRCS does not. It does not. FSA does.
So it depends
I'm
on the
trying to
agency,
remember
but
what
yeah.
USDA rule development says, and I cannot, I should know that one. But
Yeah.
usually they have a special class called small and mid-sized family farms, which is how we get most people priority points with them.
I'm pretty sure rural development does consider women as a.
I think so,
historically
but I
under-
think we go under the small and mid-sized because we think that makes the reviewers all warm and fuzzy inside. And they give you more points.
Whatever it takes.
Yes, Dakota is presenting. I think I'm supposed to help him present, but I neglected to tell him that I'm kind of organizing the conference, so I'll be in there as I can. Yes, we are not, and we are not planning to record those sessions just because the audio visual content and then all of those things. I'm not confident of our ability to record live presentations well, live in-person presentations well. So I have to do, yeah, I know you guys are coming. Jennifer's been in communication. I see chats. So yeah, Jennifer's been your all's communication point, I think. So Jennifer Weber of Community Farm Alliance for everybody else. That conference is a love project of multiple organizations at this point. So K-Card, Community Farm Alliance, Grow Appalachia, Foundation for Appalachian Kentucky, and then throw in all the usual. Yeah. Yeah. Thank you. All in spite of my being involved, it's going to be amazing. All right. So now for my shameless plug for the conference that happens this weekend. There will be a square dance Friday night, which I will conveniently disappear from because I cannot dance. But all right, so that was my interlude / mental break there at an hour. And one thing that I wish more farmers did was understand their break-even cost. I think that right now as beginning farmers, it's a lot to try to capture all of it. But there's 3 basic parts that go into understanding your break-even cost, and that's your the cost of planting and growth, the cost of harvest, especially if you have to hire someone, and any packaging and delivery. So if y'all can hear that, my husband's gonna be so exhausted by the time this is over. Because there's so much giggling, he has to be just constantly moving. So those 3 things are really, how you determine your crop's direct cost. Someone asked me recently, and I think it's a fair and a good question, and that is, how do you capture your time on, sorry, I haven't been, that is your game, you can take it. How do you capture your time? Don't pick him up too far. There's your interlude. Mine anyway. To top it off, he may not have been wearing all of his clothes. So I think one of the most undercaptured elements of a crop cost, especially in small farms and beginning farms, is the cost of your time. So I encourage you to assign a value to your time one of two places, and that can be at like harvest, just like how much time it takes you to harvest, how much time it takes you to plant. Like if you're looking at 100 rows of tomatoes, you're like, how much time am I going to spend, or 100 rows, 100-foot row of tomatoes, how much time am I going to spend each week doing that? How much time am I going to spend each week dealing with that? And assign a number to it. Like, I hope you're going to pay yourself more than $10 an hour eventually, but assign a number now so that you know, like, because if you do all this without the cost of your labor and you come up with a break-even cost, then that break-even cost is paying you nothing at all. It means you're breaking even. You're not making anything. You're just doing it for the love of tomatoes. So looking at your indirect cost, your property taxes. Let's say your property taxes are $500. You have a 100-foot row of tomatoes and you have a total of 5 100-foot rows. So that means that your total property tax for the tomato share of this indirect cost would be $100 because it's 1/5. You know, it's 500 divided by 5. So depreciation is a real expense. You know, you'd think eventually I'd fix this math over here, but I still haven't. So you want to capture the depreciation of, say, your tractor, any other major equipment. How many years what's its value, how many divided by how many years it's useful, and there you have your annual depreciation. It's not the way accountant would do it, but it's a super simple way that you can do it for yourself. In indirect, you're going to cancel, you know, put your utilities, insurance, property taxes, license, permits, accounting fees, everything needs to go in here, and then figure out, like, if tomatoes are 20% of your farm, then it gets to carry 20% of the indirect, right? These are some additional thoughts. So those are how, like, so if you put all that together, that will give you you know, the tomato share of the indirect plus its harvest, planting, and packaging delivery costs. That will give you a break-even price. And if you don't add your own labor in there, your break-even price isn't breaking even because your time is free now. You don't want your time to be free. So these are my random Eastern Kentucky thoughts. Not just Eastern Kentucky. I've lived all over the state at this point, and even out of the state. But always have a backup plan for any market, especially if they're a large portion of your farm sales. Keep your buyers informed. I developed a verb specifically related to farm to school and restaurant sales. And that is when a farm is happy, they've gotten a contact with a restaurant, they're going to be sending them like 20 pounds of kale a week or how many ever bunches, and they're super excited and it goes real well for a couple of months, and then like the restaurant just like the deliveries just stop showing up and they can't get a hold of the farmer. And what has happened is there was some critical failure of the kale crop, and rather than calling the restaurant ahead of time when they could see it coming, the farmer did an ostrich where you stick your head in the ground and pretend that it's not happening. I would argue against doing that for multiple reasons. One, it hurts your farm. Two, it hurts all the other farmers trying to sell local food into that venue and venues that venue talks to, and restaurants and schools talk to each other. So I would say that for several years, we were dealing with the after effects of 2 ostriches in Eastern Kentucky. And it took us a little while to get some trust back within school systems, particularly. Adapt your marketing to your customers and their needs. I said this to the class last week on marketing. If you find yourself having to over-educate your customers, you have the wrong customers or you have the wrong product. So you need to adapt. Facebook isn't everything. And ask someone to review your marketing materials, especially if you're making like a price sheet or something to go to a restaurant. You want to have your farm story, price sheet, you're making a little brochure, whatever. You will not, I don't see, okay, I have been professionally writing things for pretty much since I was 17 years old. I cannot make a document without a typo for the life of me. And no matter how many times I read it, I try printing it out, I try reading it out loud, and yet it's there. So always ask for other people to review things. And then use your goals that you set in the first session. Are you meeting those goals? Help that evaluate your success. Look at your current year compared to past years. Are you getting more efficient? The way you figure out if you're getting more efficient, compare those cost of goods sold to your sales. And if the percentage is getting lower, you know you're getting a little more efficient. And diversify your markets. Now, this is where we're going to open it up, and this is probably going to take this is going to take as little or as much time as you want it to take. So I would normally say small breakout groups, but Mark, how many total do we have on here now?
16 plus you and me, so 18 total.
So on your worksheets for this week, which were fairly short, aside from the farm risk that had the cash flow with it, you had what you need. Would you care to throw us into a breakout room for about 10 minutes and we can talk about what we need to realize our farm goals? Or we can do it here in one large group and we can pick Mark and I's brains about funding, or we could make lists in the small groups and come back. And because I'll be honest, if I knew of a grant to buy a farm and let me live on it for 3 years until I got the farm up and running, I probably wouldn't be here tonight. And if I haven't found it yet, I don't know that it exists. So your choice. Would you guys like small breakouts or just the whole group go? I think small breakouts to think about what you need over the next couple of years might be what you need funding for.
I don't think I got the worksheets either. I saw somebody else mention that.
The session 2 worksheets.
Yeah,
Well,
sent the session 2 went out.
Well, so mostly the worksheets are what do you need to achieve your goals? And it was one of these things. And then it was trying to figure out what funding options there could be to help you with that. It was kind of thinking through that. It was only 1 page for this. It was pretty short.
I see it in on the Monday email at 2:52, where I put the wrong start time. It just says Grow Appalachia Workshop Session 2. So Word document. Of course, there's 6 attachments, so it would be easy to overlook that sheet.
I'm actually going to take us off this. Yes.
Yeah. What if we just went over that sheet together, that session 2 sheet, and talk through what it looks like to fill that out?
That means I'm going to have to pull it up on my screen. I'm just going to pull it up for myself and not share it because I would rather see your all's faces and I'm kind of tired of staring at my PowerPoint slides. If that's okay with everyone. And I do not have a web link for the sheets that I can throw in there. So that's not what I want to open. Oh, I had an unrecovered file that I tried to delete and Word wants me to save it really badly. So I think that a lot of times, especially for beginning farmers, identifying what you need. So there was 3 parts on this sheet. I'll share it for a moment so you guys can see it, and then I'm gonna get back to seeing faces. Oh, I've got to stop that share, start a new share. Close out my PowerPoint for a moment. Are you guys seeing the sheet?
Yes.
Good, because that's not what it
Yeah.
looks like from my end. All right.
Can you make it look like, or like at
Bigger?
least scroll down to the bottom of it? Thanks.
Yeah. So I think the biggest thing is looking, depending on where you are in your journey, you might need land, you might need facilities. So what this means a lot of time is anything from a packing shed to just a storage shed to store your stuff. You might need equipment, which could be anything from a walk behind tractor to like, I really could use some new hand tools. You know, we have a farmer in Eastern Kentucky that is, everything is very efficient hand tools. Operating capital / working capital, you're going to need a certain amount of money. So a lot of times working through that cash flow budget, you'll realize like I need a certain amount of money to get going this year. And that's where something like the FSA micro loan or the Kentucky Highlands small scale farm store loan could come in, or even the KSU small scale farm grant. Do you need personnel, or is what you really need some expertise and information? Do you need someone to work you through record keeping? Do you need Grow Appalachia to help you with a production plan? Do you need somebody to work with your local farmers markets board just to like get things, you know, like those are all things that you may need. You may need coolers to transport your things to the market. Mark, you're making this face like I've done something real weird. So I don't know if it's not at me. Okay.
No, I'm just trying to figure out why people didn't receive the email. I really hate that people didn't get these documents earlier. So I'm trying to figure out what I did wrong.
Like if there's a way to mess it up, I'll find it. No worries.
Yeah, me too.
So
yeah,
but,
go right ahead. You were doing great, Marissa. Thank you.
So I do want you to like, is someone willing, like thinking about your goals that you worked on last session, like, okay, here's my goals for the farm. Think about the key things that you need to accomplish those goals. So if you all want to think through that, you know, and then down here we have the startup capital needed. So you might need money for land, equipment, operating capital. I do think that in my experience, most of my what I'm going to call small non-generational farmers are more scared of taking out farm loans than operating loans than some of my more experienced generational farmers. It does not, okay, my uncle's an Eastern Kentucky farmer, but he's been one all of his life, and he has the nicest tractor because he doesn't care to take out the loan because he has making money off hay and he knows he's going to make money next year off hay. Not everyone makes money off hay. My uncle does a lot of hay. As a matter of fact, most people don't. But, you know, it didn't scare him to take out the tractor loan because he has markets for hay. And, you know,
Marissa,
that's the way
can I
things
add
go.
something just for a second?
Yes.
Yeah. So I find that I'm often in this cycle of I can't do this until I do that. And specifically with these types of ventures, for us, we're looking at expanding. We currently have around 5 acres in fence, but we don't have good pastures. So we're looking at expanding some of our additional property, through some clear cutting and things. So we can't really do that until we either partner with someone who has a dozer or buy another dozer. We had one in the past, but didn't sell it. So we're in these situations where we have large ideas and we know they're viable, but we can't do something until something else gets done. So we're just looking at the overall planning phase of truly having a solid business plan and achieving each incremental goal is what for us is going to help us get to that end point, which is finally a fully functioning farm.
So, and I can't see who I'm talking to because it's not letting me, but so what I would say is that a lot of times this is one of those times where people do, and if cash flow is that much of an issue, then I would encourage you to reach out to and I don't know how much a dozer runs right now, but or even if you can hire somebody to do the work, but either way, cash flow is an issue. This is where I think it becomes, if you look at how much money it's going to take and see how long it's going to earn back that, like how long does it take to earn back that money? This is where going through the financials on that and seeing like, does it make sense to take out a small loan? Which is not what anyone wants to consider.
the value in the end, the return on investment. That we have.
Yeah, and I think that's where a lot of times working with like Farm Service Agency for one of those micro loans, I think that that's a really good outlet for that because the interest rates really, I haven't checked them, I didn't check them today, but a few months ago they were less than 3%. And if you're wanting to get a piece of equipment with it, they might be willing to place the lien on the piece of equipment and not your farm. So,
It's definitely something to look into.
huh?
That sounds definitely like something we can look into for sure.
It's going to take like a little while to get one of those, but in the long run, it's probably, I don't think the Kentucky Highlands loan is going to cover as much as what you need. I'm guessing bulldozers are around more than $7,500.
Yeah, you can find a good used one for around 20.
Yeah, my uncles ran a construction business for quite a while, and bulldozers were one of the things that I remember were not cheap. Heck, sometimes you can't find a good forklift for $7,500. So,
so these loans, a lot of times, that's where filing taxes on your income and expenses on the farm will come in handy, because you need some history, you need some financial history for some of those FSA loans. Is that correct, Marissa?
yeah, and especially if you've been filing a Schedule F so that you are a farming operation, you have a farm number, and you have like the FSA office is where you get your farm number. So knowing the people in that office and being able to come in and talk to them and ask them questions. The other thing, it does contain some part of the risk because you're signing your personal name to that. And generally, if an LLC doesn't have, like, even if you established an LLC and you wanted the LLC to take out the loan, you're going to have to put your personal guarantee on there anyway. Just with the lesser established LLC, or other incorporated entity. That is my experience with lenders. They'd like to have someone's name on the line until you're a really big entity. So yeah, I would look at something like an FSA microloan. And there are organizations in the state like Mountain Association and Kentucky Highlands that do loans specifically for small businesses, but quite frankly, the rates cannot match what FSA can do. They'll turn it around and they'll give it to you faster, but the rates, I mean, like I've seen between 7 and 12% interest rates on those loans.
Lisa has a question, Marissa.
Yeah, I had a question about, because I don't have any land or anything yet, like truly the beginning. And I wondered, how much land do you need? I've seen different books, talk about that you can produce quite a lot on a small plot of land, depending on the methods that you use. And so, yeah, like how can you squeeze a lot out of a small bit? And like how do you get, are there like any sort of estimation sheets about how much acreage do you need for X amount?
It
Are there things
depends on
like
what
that
you
out
want to
there?
grow. It really depends on what you want to grow. I mean, one of the more successful farms we've worked with is Need More Acres Farms. And it was named that because it started on 2 acres. And at one point they were doing 50 or 75 CSAs off 2 acres in their neighborhood lawn. They now have a large farm. But, if you look at if you've looked at Jean-Martin Fortier's work, the Market Gardener, which I think a lot of his stuff was very, very small acreage. Mark, you're probably well more familiar with that than I am. I read the book once and called it done, sometimes reference it. Their estimates of having a 2-acre farm in Quebec, is that right? Yeah, it's in Quebec. The sales estimates on that farm off 2 acres are not what we could get here in Kentucky because our prices are not that high. So at the same time, it depends on what kind of income. So what kind of income do you want off the farm and what do you want to grow? And then I think from that, you look at how much land you need. And
there are plenty of calculators to look at, production per 100-foot row per acre. Yeah, so it's very specific to the cropping system you want to, utilize on your
Yeah.
farm.
I would say, I mean, I've seen people in less than 2 acres, it gets real hard for
Mhm.
most people. Is that true for you, Mark? Or if you're wanting to make like $30,000 to $40,000 of income a year?
Yeah, depending on what equipment you have, that can really either limit you or open up your opportunities based on how efficient you can manage that property, how efficiently. Because
Mm.
there's a lot more
Okay.
than just growing and harvesting. There's, all these other components that are going to eat up a lot of your time. And we'll get into that when we look at production planning and calendar development. We'll look at some of that, and it'll help you kind of organize how much acreage or square footage you can manage effectively.
Mhm. Thanks.
Sure.
Yeah, I would say this is probably a strength of working with K-Card and Grow Appalachia, because Grow Appalachia will be happy to help you figure out how much you can grow, and K-Card will be happy to help you research farmers market prices and figure out how much you can sell, what you produce for. So we just tack on at the end after they do all the really hard work of going through production planning. So
Thank you.
Marissa, how do you recommend someone deciding when they can make that investment on a piece of equipment that may increase their efficiency or reduce labor? What's that process look like for you? Because, we all want the next great thing that's going to make us so efficient that our profit margins soar through the roof.
So I've asked different farmers, especially successful ones, how they decided to do it, because my thing is to show you options and let you decide. That said, one of the things that and personally, since I'm going to stop sharing my screen now, since is that okay? Can I stop sharing now? You guys have the idea of the sheet? Okay. So personally, if the investment will be able to, as far as a piece of equipment or a building, can pay for itself in 3 to 5 years, I want it to pay for itself before its useful life is over. This may not be true with the tractor. Okay. But if you think about it, if you've been doing a walk behind tiller and you buy a tractor, your efficiency is going to increase quite a bit. And the amount of product, if you have the land available, would increase quite a bit. So factoring that in, I mean, we actually, when we do financials, a lot of times we will go ahead and run Excel does it for you, which is why we all use Excel. You can do a loan amortization table and see okay, well, we've got a 20-year loan on this tractor. At what point does having the loan on the tractor, when does it increase your sales so that it makes sense? We're now over the hump, kind of. And so that's 3 to 5 years is about it, for me.